Hi traders, welcome to this video. Today I want to talk about breakouts and breakout trading. 95% of my trades are breakout trades. I love to trade breakouts because they are very easy to spot and give a very good risk-reward ratio. On social media, a lot of people always talk about breakouts don't work, or breakouts are not working anymore because of algorithm trading or similar. I personally think that's not true, and my experience and also my results show me that this is not true. Breakouts only work in certain market periods. Like any other setup, breakouts have their special time, and only in a very short opportunity window, breakouts are working. And this is really the same like every other trading style. In some periods, the trading style is working, and in some periods, the trading style is not working. Okay, in this video, I want to show you some trades I took, and I want to go with you and show you some things which I look for when I take a breakout trade. One of my personal favorites, or favorite example, is always Shopify. I traded it multiple times, and it was one of the biggest winners in the last years. I also mentioned that I took this trade here, or that I traded this trend here, but I want to go through this breakout here. You can see that before the trend started here, Shopify was consolidating in a I would not say downtrend, but it's more a consolidation to the downside. Then you can see that the market itself, here I added the S&P 500 to the chart, the market found a bottom, and it was on 24th December 2018, and this was also the bottom in Shopify. And I always monitor stocks, leading stocks, which are in a consolidation like the Shopify, and I always look at the relative strength of the stocks, and you can see that Shopify made a new low here, and in the relative strength indicator, that was a higher low, and this show me that Shopify is much stronger than the S&P 500. You can see that the S&P 500, for example, made a real low, so it corrected, corrected some percent from the last lows here, and Shopify was corrected or retested the previous lows here. So Shopify in that scenario was outperforming the S&P 500, and then you can see that there was a rally to the last highs here, and then you can see this bar here, this shakeout bar, and this shakeout bar was also on this shakeout bar you can see a very high volume, and this is one of the things I want to see if I look for a breakout. I want to see real strong volume, and this black line here in the volume, this is the 50 day moving average, and you can see that this bar was well above the moving average here. And I think that was a day when Shopify published earnings, and the price go down and then it goes up. And you can see that it also was not a breakout in that example, but it was around the last highs here. And if you look to the indicator here, you can see that Shopify, or that the relative strength indicator was on a new high before the price. The price was not on a new high here. The relative strength indicator was on a new high, and this also show me that the stock is outperforming the S&P 500. And then you can see that here, for example, on the 19th February, the stock made a new high, and the stock made a new high with higher volume. And this is what I want to look for. If I look for breakout trades, I want to see a new high in the relative strength. I want to see a strong volume, and I want to see that the market itself, the stock market, is in an uptrend and in a young uptrend. So that was an opportunity to buy into Shopify here. Of course, also this reversal bar was an opportunity to build maybe one small position. But if you missed that reversal bar here, this bar was definitely a reason to buy. And if you missed that breakout, there was also some opportunities. For example, this bar here on the 11th March, another bar with a new high in relative strength with good volume and a new price high. Of course, you can see that maybe you got shaked out here, but it depends where you enter and where you put your stop loss. And then you can see a very nice trend developed. Some month later, I took another trade here in Shopify after Shopify produced this very nice double bottom, and you can see here that that the RS line, so the relative strength line, was not on a new high, but you can see if you compare that here, if you took this high here and in the same high in the relative strength line, and you go to the right side, and you can see that that there was a new high in the relative strength line in comparison to the previous high here. And so for me, definitely a valid entry. And you can see the volume here was great. So it was more than 100% above the moving average. So really, really good volume. I want to see at least 40%, better 50 or 100% above the moving average 50 in volume when I enter a breakout trade. And also the market was on in an uptrend here. Yes, it was a little bit it was not a fresh new uptrend here, but you can see that here was a correction, and when the market started its rally again, or its uptrend again, then Shopify broke out here. Okay, another example, Koopa. I have to go back a little bit in time. That was 2019 here. Very, very nice trade. Also, you can see here a double bottom pattern. And you can see the same characteristics here. You can see the market was in a very young, very fresh uptrend here. It started from the lows and started its new uptrend here. The Koopa was very strong in the relative strength. You can see that the price was not on a new all-time high, but the RS line was a new all-time high. That shows me that Koopa is really outperforming the market. And you can see also the very good volume here, the high volume bar. Another sign I look for before I take a breakout trade is a decrease in volume. That's always a big benefit for me, and I prefer a dry up in volume before. Sometimes you don't see that, but if a stock is able to produce a dry up, that gives me more trust into the trade. And a dry up in volume, you can see that here the volume is well below the moving average here. A dry up always shows that the selling pressure is decreasing. So the selling from other traders, from institutions, is drying up. And then the stock breaks out, and then the buyers are back in control. It's always a fight between sellers and buyers, and what you want to see and what you want to analyze in the volume and the price action is always who is in control. And you can see here, for example, a big volume bar and a down bar that shows you selling pressure. And if this, if here, for example, the small correction here or retest of the EMA 65 is accompanied by lower volume, that shows me that the selling pressure is getting lower, and this is always a really good sign. Okay, so again, we have a valid pattern. Koopa was a stock with excellent, very good, outstanding fundamentals. Another thing I want to see, if I take breakout trades, you see a very fresh trend in the market. You see high volume and new highs on relative strength. So everything I want to see, and then the trade is working. Roku, another example, here in May 2019, and this was a different situation. You know, you can see that I'm speaking about this one here, this bar, this breakout bar. You can see that Roku has some very deep cup and handle. So I think it was 60%, was a very deep cup and handle. And then it broke out with extreme good volume here. So really good volume. And you can see that it was also a new high in the RS line here. And you can see also a dry up in volume, a really sharp dry up in volume, which is a good sign. But the market itself was not in a good situation here. It was more like a top. And that was a day when I think Roku published earnings. And this is a special situation. If you have a market which is in a general uptrend, so you have a bull market, and we had a bull market at that situation, and then you have a stock with great fundamentals showing technical strength here in the RS indicator and also in the chart patterns, and then the stock published earnings and breakout to the upside, then you can take that also. So, and you have multiple options to enter. You can do that on a breakout above the last high here. You can do that on that situation, or you can also do that here. And Roku was a great trade, but you can see the market itself was here in a downtrend, and then you can see that the rally was not so strong in that situation. There was a sharp correction also, and Roku had an exhaustion run at the end and then started correction. Okay, another candidate, ENPH. ENPH was also around here on the bottom of 2019. It was a cup and handle or a rounded bottom or something. You must always have in mind, I'm not a perfectionist when it comes to chart patterns. I look for details in the chart patterns, but I'm not. I don't try to find perfect chart patterns, because I always made the experience that there are no perfect chart patterns. They always change with the underlying conditions in the stock market, and sometimes they are a little bit more volatile. Sometimes they are very, very they are like a picture perfect chart pattern. But I don't try to be perfect here with chart patterns. Okay, you can see the same conditions here. Let's take this one here. You can see the same conditions here. Chart broke out here on new highs with new highs also in the relative strength indicator. But if you use this high in the relative strength indicator, so if you compare that one here, you can also take an early entry into the trade here and phase. You can also see we had a young market here, a young trend, and it has the stock itself had a very nice volume here on the 16s. And also, if you don't want to take early entries, you can for example buy on that breakout here, which is very, very strong. Had a pullback here, was okay because it retested the last highs here. Or you took an early entry here. But you can see the conditions itself are always the same here. I personally don't trade it and face here. I missed that trade because of the very low price here. I don't trade stocks below $7 to $9. So I'm going with the more liquid ones, and I'm mostly trading stocks. I prefer stocks with $25 or $40 or something like that. So I missed ENPH, was a very, very nice trade here, but I caught some other winners. GSX was a trade I highlighted also in my free newsletter, and I took this one, and you can see here a very nice consolidation. So the price was consolidating here. You can see that also the S-line broke out to new highs here, and you can see this volume bar. But please, this volume bar was a public offering. So the company did a secondary offering with stocks, and there was a very high volume bar. But I personally look at the next day here. The next day was also above average volume, and it was on a new high, and that was a breakout day here. You can see that here. The candle, it's a very big candle and with above average volume after secondary offering. Perfect. So you can enter that here, and then the stock goes sideways and gave you the opportunity to add to your position very early in the trade, and then you can see this big rally. In that situation, you can see that the market itself was in a sideways consolidation or correction, and when the breakout happened here, the market came off the lows here, and when the real rally started, the market also started to rally from the lows. And I only can repeat this. You must look for the right market conditions to trade breakout stocks. You need fresh trends. And the most breakouts are working if the market started to rally from lows. It is not that, or the most failed breakouts happened if the market started to top. So you must always see when the market is coming from the lows and start to rally that you then buy breakout stocks. Okay, it was a very, very good rally here. So then let's look at the last example here, TDOC. Also very recent breakout, and you can, I want to zoom out a little bit, and then you can see here TDOC built a very, very nice volatility contraction pattern here, and then started to break out, and there was this opportunity to buy into the breakout, and that was the second one here. And you can see that also on the second scenario, the relative strength line was not on a new high. That means it was a little bit underperforming, but then the stock started to outperform here. So it was, in that situation, it was more a lagging stock, but it started to outperform afterwards, and it was very close to the highs here. In that situation, you must always see what is going on your watch list. If this is a leading stock with good fundamentals, and maybe it's lagging a little bit behind, but also the RS line is in a very good uptrend, a very steep uptrend, you can buy a first position or a small position to test if the breakout can follow through. But what was very, very convincing in this situation here was the volume. The volume was, you can see it here, more than 100% above the moving average here. That was a very, very good breakout condition, and also that one here. And this is exactly what I meant before. I don't search for perfect patterns, because there are no perfect patterns. Sometimes you have market conditions where growth stocks are not leading, and then you maybe have to buy a stock which is lagging a little bit behind the market, but shows great conditions in volume, in fundamentals, in the chart pattern itself. And sometimes growth stocks are leading in the markets, and then you can buy the real true leaders, like for example GSX, Roku, Koopa, Shopify in the past. That one here, TDOC, was lagging a little bit behind, and in that situation I personally would buy such a trade, and I did it here. I bought TDOC here after this very strong breakout here, and when the RS line was a new high. I recognized that it was not the perfect condition, but I had a very big trust in the story, and I also had a very big trust in the breakout itself with a high volume, good fundamentals. And you can see that Shopify then started to rally. I sold the stock in this high volatility situation when the market starts to break down. So that's when I want to be out of the market. Okay, I hope this video helps you. To sum it up, don't look for perfect patterns. There are no perfect patterns. Look for really, really strong volume, 40, 50, 100, 200, 1000% above the moving average 50 on the volume. These are signs that there is a high demand for the stock and institutions are buying aggressively. Look for new highs in the relative strength indicator and try to buy breakouts when the market is coming off the lows and start a new uptrend. That's are the best conditions. And of course, make sure you buy really, really good stocks with a great story and with great fundamentals. Okay, if you want to find more stocks like Shopify, Koopa, Roku, and Co., subscribe to my newsletter. I always send out 4 stocks from my watch list every Sunday in a newsletter. And of course, you can follow me on YouTube and on Twitter, Instagram, and Facebook.